Thank you, Francesca and Gavin. Just to introduce myself and my perspective on this, I'm Carolyn Clark. I have a portfolio of roles working across internal audit, risk governance, and also as a non-executive director for a number of companies. And I'm going to share a few insights building on the report that Gavin introduced and Gavin's comments, particularly coming from the perspective of a director and audit committee chair, and my thoughts on where I think internal audit should really be focused. And I think to start off with, one of the real challenges is that there are short and long-term demands on organisations and indeed on the internal audit plans of an organisation. And I think particularly at the moment, it is quite right and appropriate that internal audit functions are really looking at the core control aspects of the organisation in the aftermath of, or indeed continuation of COVID, remote working, changes in process and so forth. And therefore I think whilst it's concerning that from Gavin's analysis, only 25% or so, a quarter of companies are really thinking in detail about specific actions and strategies around climate change. And I think internal audit functions are therefore following what the organisation as a whole is doing. I think it is understandable in some ways that the priority in the very short term is around other aspects of core controls. But I don't think that we can sit back and allow that to be an excuse not to be starting a longer road of planning our response and approach. Ultimately, climate risk is going to become one of the main ways that companies are judged. We see already the impact of ESG ratings, the fact that investors are really asking questions around how climate risk is being addressed. And therefore, companies have to be able to respond with confidence. And that means not simply making statements that may or may not be true, but responding with the same degree of confidence that you might have in your financial numbers, or at least you should have in your financial numbers. And increasingly, companies will be rewarded for having properly integrated climate disclosures and broader ESG disclosures within their annual reports alongside the financials. And so the same degree of assurance is going to be required around those non-financial disclosures that we've always expected around financials. But I think it's a real challenge for chief audit executives, for heads of internal audit to say, well, what is a short-term focus? What is a long-term focus? I think it's really important that the heads of internal audit are standing up and facing into that challenge, because it's how we really evidence that we are strategically aligned with the broader organisation, that we understand the emerging risks and issues, and that we're starting to help our organisations move towards them. I think the rate at which that will happen will depend on sector. It's interesting that Gavin's example of NatWest, and indeed talking what Cecilia will say shortly, is clearly in the financial services sector. And as a board director at Starling Bank, I absolutely understand that the financial sector has a real responsibility for driving investment, for driving that financial responsibility that then cuts across all sectors. I also sit on the boards of two companies that have a very strong environmental focus as a core element of their purpose and strategy, one being a hydrogen fuel cell business and the other being plastic recycling. So of course, in those businesses, we would expect that our audit and assurance has a really strong focus on the environment and on climate, because it's absolutely core to our strategy. I can understand, though, that for companies that are perhaps in different sectors, the timing and the way in which climate needs to be addressed is going to evolve over time. But that doesn't mean that we can sit back and wait for that to happen. TCFD reporting, those disclosures on climate-related finance reporting, I think is going to be a real turning point. As soon as we start to say things in our annual report and accounts around how we're managing climate risk, how we're thinking about those 4 elements: governance, strategy, risk management, and the metrics and targets, it is absolutely an imperative that we can stand behind those items and that we have confidence not only in the metrics and the data that we're reporting, but in the underlying processes and controls that generate those numbers and targets. And we know that from a financial perspective, those processes stretch across many parts of our organisations. At Centrica, for example, where I was head of audit, any of the financial numbers were generated through processes that were the responsibility of our customer services function, our procurement function, a wide variety of people across the organisation. And that will be even more true when it comes to climate risk. So I think there's a really important piece of work that all organisations could and should be doing to think about how that landscape really plays out. What is the architecture of your processes that supports the kind of statements and disclosures and indeed ambitions and opportunities that you have for the organisation? And if you start to focus on that, whether or not you build it into individual audits in the current year, you will be able to start thematically identify the relevance of audit and assurance within each of those process areas. I think there's very little that you can add to that. It was very comprehensive. I think part of the challenge though is that there is so much information out there, and few audit functions will be in the fortunate position to have somebody like Cecilia who's able to dedicate their time wholly to this area. Only probably the very biggest financial services and possibly FTSE 20, FTSE 50 companies will be in that position. So I think you do have to be choiceful because you've got to balance this work with the rest of the work that you're doing. I think in terms of what you can be doing in the first instance, it is to be out there ensuring that you're driving conversation around climate-related risk as an element of the risk and emerging risk conversations that you're having, and really focusing in on the implications for your organisation. There was one question in the panel that referred to, what's the reach of this that we should be looking at? And there's something called the Greenhouse Gas Protocol that talks about 3 scope areas. And I think that's quite useful to think through in the first instance, because your company, your organisation will have an ambition around how deep they are trying to look, and you do have to take it one step at a time. And I think from an audit perspective, we need to be fully aligned with the ambition and strategy of the organisation. So the first sort of level, scope 1, direct emissions that the organisation has, whether that's through transport or through the digital footprint that you have, the properties that you are based in, and so forth. So if I was investing my time, I would be looking at those pieces first and thinking through and reading around the impact that the company directly has. The second level is the indirect cost that we directly purchase, if you like. So the utilities that we utilise, for example, raw materials that we directly use. And again, that then gives you the next sort of level of questioning and direction to focus on. And then the all-encompassing piece at scope 3 is all of your indirect costs, be they upstream or downstream. So involving your employees, your suppliers, or looking at the other end at the customer base. And I think this is where, as internal audit professionals, we have to start to have conversations with the organisations we partner and collaborate with, because we need to make sure that we're thinking through that, but probably won't be auditing exactly what our customers or our suppliers are doing. So how do we then capture and have some assurance around any statements our organisations might be making?
So know your scope 1, your scope 2, your scope 3, And the other important thing, I guess, is that, you know, actually everyone's scope 3 is going to be somebody else's scope 1. So it's having that relationship and understanding, you know, where all your
I also think it's, you know, some of the conversation we've had is when you're looking at reducing your climate footprint and moving towards net zero, there's real scientific changes that you can make, and then there's the credit offsetting that you can do. And, you know, thinking about how your organisation is representing that and how it's getting different forms of audit and assurance, which, as you say, needs to reach into other organisations, is really important.
So the next question I can see, and Carolyn, I don't know, this might be one that you can look at. How do you ensure that investment funds, ISAs, OICs, etc., which use the sustainability in the title actually reflect what an investor expects from a sustainable fund? Terminology is moving from ethical in the 2000s to socially responsible investment in the 2010s to sustainable, but all are at risk from greenwash issues.
I think there's a whole series of questions embedded within that one question, isn't there?
What do you think?
And I'm not sure whether whether the person asking the question is approaching it from the perspective of being an internal audit within the investment fund or looking at it from a personal perspective. But I think the important thing is the greenwashing point, that I think there will be increasingly you know, focus and questions and interrogation around the statements that organisations are making, and greenwashing will not hold water for very much longer. I think it's right, and I think we still continue to have a proliferation of different phrases and terms, and you know, I struggle within the companies that I sit on the board of, are we talking about climate here? Are we talking about environment in the broader sense? Is it ESG? If it is ESG, what does the S mean? What does the G mean from a governance perspective? And you're going to have to navigate through these questions as an individual company. But the important thing will be that disclosures, reporting, and then of course the assurance that supports that is properly reflective of your organisation. There's no boilerplating here. We're going to have to start really talking about what it means in the same way that, again, it's going to sit alongside financial reporting. You don't boilerplate your financials, you tell what's happening, and your disclosures and your policies and your standards have to be the right ones for your organisation. The same is going to be true for environmental and broader ESG reporting, but it's going to take us a while to get there. So, you know, our role, I think, as auditors is to help to drive that sort of truth, transparency, authenticity about what it really means.
There's a question coming that the asker is looking for existing guidance to auditors and assurance providers, as well as ISA 720. Are there other, you know, such as IAASB or IFAC standards that we can reference to explain to non-auditors the type of role that the assurance provider has for non-financial or other information disclosures? I mean, we're seeing an explosion in sustainability standard setting these days. What are your thoughts, Carolyn? I can see you've come off mute there.
Yeah, so I think in terms of explaining to non-auditors, accountants and financial people, I would actually link this to the consultation that the government has put out recently in terms of the proposal for an audit and assurance policy, and indeed the work that I have done with ICAEW looking at that audit and assurance policy, because that's really setting out a framework to explain how assurance is provided across the range of financial and non-financial issues, and the issues and considerations that the audit committee have had and should have in terms of thinking about that. So I would, rather than referencing specific standards, be saying that as non-auditors, as a board, we have to really ask ourselves in very sort of a basic language almost, what do we want confidence in? What do we have to believe? And where do we get that confidence? Where are we best sourced? And some of that will come from potentially third parties, which may be our external auditor, or it may be a more bespoke provider. But we also have this great resource in terms of our internal audit and internal assurance, excuse me, that we can use to give us that confidence. And ultimately, auditing climate risk is no different to auditing any other non-financial risk. It's about looking at the risk, how it's going to emerge for your organisation, what processes and what activities within the organisation drive that risk, where the opportunities and the upside is to that risk, and then what kind of controls and parameters and mitigating actions do you have to ensure that you're taking the risk within the levels of tolerance that you have. And as internal auditors, we'll then be looking to audit the effectiveness of those processes and controls. I think we can complicate it with all of the different reporting frameworks, and I think it will be quite some time before those reporting frameworks really get aligned. TCFD is a great way of looking at it in a very principles-based, top-down categories way, rather than getting into the detail of different reporting initiatives. But fundamentally, from an audit perspective, it comes back to the same basic principles and rules that we're used to dealing with, and we ought to have confidence as auditors that we can do that as well.
Carolyn, what are your final thoughts and key takeaways?
So I'm going to agree with Gavin absolutely, but say, you know, I don't think we should be beating ourselves up if we're not actually doing audit work as yet, but we should absolutely be committed to having the right conversations and to being engaged. We want to be at the forefront, and being at the forefront means understanding the position that your organisation is taking, understanding the priorities, being an advocate and driving that that discussion if it's not happening adequately, but making sure that you're then prepared as a team to respond at the right time and in the right way. So engaging in all of those sources of information that Cecilia was talking about, that Gavin was talking about, to get yourself into the right position. And of course, we'll soon get into a reporting, into the period where we'll be planning for 2022. So making sure you've done that work now to be able to plan at the end of this year to be able to deliver in 2022, it comes around really quickly.